All right, guys. We got Tesla Q2 earnings today. Let's do this. Expectations for the earnings. We'll put those up on screen. I believe they're expecting 49 cents a share. All right. So, yeah, so expectations are for what I'm showing. There's a couple different expectations showing up here. What I'm showing is 59-cent EPS on revenue of 25 billion. So we'll put this up on screen. Again, 59-cent EPS on revenue of 24.97 billion. Will they beat or miss? Let us know live in chat. Back old earnings season here. This is our first big earnings report that we're covering. Tesla actually down a little bit since the opening bell, a little bit relative to the previous closing price as well. It's at 248 right now. My portfolio, my whole thing is down really, specifically from Nike, MU. I saw Nvidia start to run this morning. But it has since kind of dipped down some. So Nvidia is actually red on the day now. It's all the way back down at 122s. What's up, Liv, Handled, Mo, Martin, Arif, Pawn? What's up, guys? Again, what do you guys expect for Tesla earnings? I'm not sure what to expect. I'm going to drink the little bit of coffee I have left. We also have Google dropping earnings. Google expecting $1.85 a share on 84.2 billion in revenue. So again, on revenue of 84.2 billion. Can y'all hear the music? You should be. There we go. Put that up on screen. We can put Google up as well. Here's a video on the left side. Google, which does report after the close. Slight green day for Google. Hymns. All right, is the music loud enough? Let me know what you guys think. Hymns having a great day. We're gonna do a poll. Does Tesla beat or miss their Q2 earnings? All right. All right, so we're going to give a couple options. Does Tesla beat or miss their Q2 earnings? You could vote on a couple different options. One of them is that you're here for Alphabet Google earnings. We got, I don't know, see results. Beat, miss. What do you guys think? Yeah, we're monetized. Yep. All right. SPY, honestly, we talked about a choppy trend today. And honestly, I'm realizing like my best like day trades are going to be much more suited towards longer term, smaller share positions leading into earnings. Much better suited towards that, with everything coming out today, everything dropping before the closing bell, everything is going to be better suited with me today. Towards smaller, longer range bound trades. We'll see what happens. But Tesla slowly breaking over the 200 EMA. We could look at the EPS graphs for Tesla. Here's Tesla's EPS graph. So EPS is earnings per share. You know, they said it would take a little while for the Cybertruck to really start paying dividends. And you can see their last one showed 34-cent profit. This upcoming one is expected again at 59 cents a share. 59 cents a share. We also have Enphase, Visa, Texas Instruments, Chubb, Seagate, Mattel, a couple other companies dropping after the close. But yeah, you can see Tesla's EPS has been a little slow. You know, since they really started achieving profits, I would say 2018, 2020, they really started making money. They're back down, though, to where they're at 34 cents a share for the last earnings report. This one, again, we did this earlier today, but this one they're expecting 59 cents a share, which would look like this if they hit it. You know, it'd look something like this if they showed up next to that trend. So you can question, what do you think the trend looks like? But yeah, that's kind of what they're looking like here. What's up, Sam? Yeah, I like your choppy zone strategy trades leading into news. Yeah, I mean, I think it makes perfect sense to trade that way. You know, with everything coming out, like, I think it makes perfect sense trying to trade that way leading into big news reports. And so Tesla's revenue, when we take a look at their revenue here, Tesla's revenue is what shines if we look at it. So like here's Tesla's revenue graph. Kind of the same thing, but it's much better. This one is expecting, again, we're expecting Tesla revenue to show up at 25 billion roughly. So right around here is where their revenue is expected to show up at, right around here. Now, again, we'll see if this is what it looks like. But I think it needs to break this revenue eventually. If not, the growth is slowing down dramatically here. But I think it needs to break this. If not, again, the growth is slowing down dramatically if it can't break these levels here. So again, we'll see what happens. It's an interesting time for sure. 45% of the votes think they're going to beat, 26% think miss, 29% say I don't know, see results. We'll do a Twitter poll as well. We're back at earnings season now. You know, will they talk about the Robo taxi event is the question, and I don't know. So you can vote on that poll. Let me know what you guys think. We got about 25 minutes. Tesla specifically is scheduled to release at 4:10 market time, so 10 minutes after the closing bell is when Tesla's supposed to drop, right? But we'll see what that looks like. We'll see what the market looks like as well. Again, get this out the way. Get my long drawing hidden here. And look at Tesla. Tesla's trying to move up here. It's trying to go. You know, Tesla is sitting at right under 250s. I think 250 is a big milestone level for it as well. So big milestone level for Tesla is here. We'll see if we can break that milestone level at 250s. I think, again, the big question is, does Tesla talk about the Robotaxi event? Originally, it was scheduled for next month in August. They now pushed it back to October. And, you know, I think it's going to be a big talking point for their earnings. You know, I think they want to talk about this event. I think it's one of the things that can really lead Tesla to the next level here for their earnings. It can really benefit them if they can perform well for their earnings. And so, yeah, it's a big talking point. It's something that they definitely want to look at, talk about, you know, cover. I think if they don't mention anything and they don't say anything about it, then it's going to be a little bit lackluster, a little disappointing, I think, is my guess here. But yeah, we'll see. Hopefully these headphones stay charged. I don't know where my other headphones went. I lost them. I don't know where my AirPods went. They're somewhere. How can I become a bear? Well, bears just means you bet on the downside. They might have a surprise for the Robo Taxi. Maybe. You know, looking at the SPY here. The SPY currently at 555.20s here. So we'll see what this looks like today. I'm curious to see what they show. This is the first big earnings report. We had Netflix. Netflix usually posts a pre-recorded video for their earnings report, so it's just not the biggest, most significant thing in the market like Tesla earnings can be, or like Google earnings, or especially like Nvidia earnings. Nvidia earnings will really move markets in a huge way. And so, yeah, we'll put a timer up. That is one thing I forgot. Right now is a timer. It's supposed to drop in about 32 minutes. A little bit earlier, a little bit past that actually, but hey, we'll see. Tesla breaking over the 200 EMA, pushing towards 250. Again, I do think that's a huge milestone level. And so we'll see what that looks like. My daughter has my AirPods. She probably does, dude. Bear or bull, guys? Let me know. So, honestly, we're using our choppy strategy here, shorting the SPY right now. Same choppy kind of neutral strategy. Kind of doing this in the background here, playing around with it. You know, we're pushing up towards the VWAP right before earnings plays. Again, we predicted this choppy action. We'll cover it a little bit more. 75 shares left. We'll see what that looks like. I think Tesla will miss earnings, but guidance will pump it. Yeah, guidance is going to be a big, deciphering factor here for sure. Honeywell is supposed to report earnings too. Honeywell is very green. Bear. Again, what do you guys expect for the Robotaxi event is the question. I don't know. So, again, we just kind of pushed all the way back up. We're very green. We're not going to lose money on this trade, I don't think. At least we'll get out before it breaks that. But, this VWAP level's been tough. We're kind of bouncing back and forth between the VWAP and the 200 EMA. Again, not really a shock. Take another little piece off. Just stay in 50 shares. Little playful trade ahead of... I'm in Tesla already. So, I am in Tesla. Tesla earnings drop it at 4:10 technically is when they're scheduled. Google earnings drop. We got, again, Tesla, Google, Enphase, Visa, Texas Instruments, Chubb, Cap One, Mattel, Matador, a bunch of other big earnings reports also here. So it'll be interesting to see what we get today. This is the first big day where we actually have like a significant amount of earnings. There we go. Maybe I should have held this short position a little bit longer, but that's all right. We'll cover at the bottom of this range here and go back to Google. I'm really going to be trading the same strategy ahead of FOMC on Friday. Friday's a big day. A lot of volatility going to happen. Not Friday. Wednesday next week. Wednesday next week, we got the FOMC meeting. I think we also have non-farm employment data coming out too. Smash the like button. I'm mostly interested in what they'll say about Europe. Europe is really bad. There's no stock on X or S. Stocks are rising. It's like Tesla fell asleep in Europe. Also, no incentives. Yeah, it'll be fun to see what happens there. Again, Tesla's a big weighted stock, right? So Tesla, let me use AI. I always kind of pull up AI to look for this. So it's in the top 25. in ranking. I guess the Q has more. It's 13th in the S&P 500 for ranking for Tesla. What about the NASDAQ 100? It ranks 4th in the NASDAQ by 100 by weight. Approximately 5% of the NASDAQ 100. So yeah, definitely heavily weighted. Definitely market influential. What time is Google? Google's supposed to report right at 4 p.m. Eastern Standard Time, like right at the closing bell for Google. All right, so we're going to do a... All right, so yeah, so just to preview Tesla's earnings today. All right, so today is quarter 2 earnings for 2024. It releases right at the closing bell at 4 p.m., right about 4:10. A lot of some points of interest for investors today. Analysts are expecting to be around 61 to 62, down from 91 in the same quarter last year, but higher than the 45 cents reported in quarter 1 of 2024, according to Electric. Revenue is anticipated to be between $24.4 billion and $24.93 billion, which reflects a year-over-year decrease, but a sequential increase from quarter 1 of 2024. A couple metrics to watch here. Vehicle deliveries and production for Tesla reported quarter 2 deliveries at 444,000, a decline year over year, but an increase quarter over quarter, and production stood at 411,000 vehicles. Analysts are going to be looking at and scrutinizing how these figures impact overall revenue and margins. Another key metric and thing to watch is the average selling price for a Tesla. With Tesla frequently adjusting prices, the ASP is going to be crucial in understanding revenue dynamics. Price cuts and discounts across various markets could affect profitability per vehicle, and that's definitely something you want to pay attention to here. I know the last debut of the Cybertruck, one of the things that Elon said that really hurt the sentiment of Tesla, deeply moving forward past the earnings report, was that the Cybertruck would take a while to really start showing an improvement in margins. Like for the Cybertruck to genuinely benefit margins moving forward, it was going to take a long time, he said. That negatively impacted the sentiment over the last couple months, really. And so that's something you want to listen to about profitability in regards to the Cybertruck and like what that overall means for everything. Like, is the Cybertruck going to be a big pusher in terms of profit or not? Energy storage is another thing that's gaining attention, with a record deployment of 9.4 gigawatts of energy storage in quarter 2. This segment's revenue contribution and margin performance is going to be crucial, according to Electric and Business Insider. Gross margins obviously is always important. They're the industry leading gross margins. They're the industry leading company for gross margins a lot of the time, and so people are definitely going to be watching their margins. Guidance is going to be a key factor as well. Quarter 2 report will reveal if the company has managed to maintain or improve margins amid all these challenges that we spoke about in terms of like adjusting the average selling price, the Cybertruck influence to everything, vehicle deliveries and production numbers. A lot of these are down year over year, but again, up sequentially. So what that means is that they're down relative to the same period last year, but they're up over the last quarter, right? So you could maybe argue both ways. They're good, bad. Again, investors are going to be watching guidance for the remainder of the year, updates on the Cybertruck production, progress of the 4680 battery cells, timeline for Robo taxis are all expected to be big points. Hopefully they mention some of this here regarding Tesla. And again, we'll see what happens. A lot of political and regulatory factors, political endorsements, impacts of EV. We'll see if he talks about the current political landscape of what happened over the last week with everything. But yeah, short-term financials are important. Tesla's long-term growth strategies, especially in energy and product lines like Cybertruck, are going to influence investor sentiment and overall stock price. So we're watching for it, guys. We'll see what happens. Let me know what you guys think about all of this stuff in chat. Let me know how you feel about all of this stuff in chat. And yeah, it'll be fun to see. Again, SPY maintaining that choppy trend that we, predicted here. If we look at the SPY here, Google also reporting earnings. Again, SPY kind of going up and down sideways like we kind of expected here. We'll give you a little rundown on Google's earnings as well. Bearish on both. IWM. Yeah, IWM, the Russell small caps have been moving, you know, last like couple weeks. Not a shock. They're getting close to highs. And so, yeah, looking at Google on the left. So, or that's the SPY on the left. Looking at Google here. Really, we're going to look at Class A shares, which have more voting rights and ultimately better margins here. So Alphabet's going to report Q2 earnings today as well after the market close. Revenue and earnings is projected to reach $84.3 billion, 13% increase from Q2. Net income for Alphabet is expected to be $23 billion or $1.85 a share, up from $1.44 a share a year ago. So it's doing better than it was last year. The company reported $80.54 billion in Q1, making this quarter's estimates a significant step up. Investors are going to be watching performance of Google Cloud, expected to contribute over $10 billion in revenue to Alphabet. Continued growth in this segment could offset concerns about AI spending and initiatives. Strong performance in search and YouTube ad revenues are going to be very important. Alphabet has seen substantial growth in advertising, and analysts are going to be looking for momentum there. AI updates for Google is going to be big as well. Updates on Alphabet's AI project, including Gemini. I just got an email about Gemini, and Project Astra are going to be big. The projects are expected to help them compete with OpenAI and stuff like that, so we'll see what that looks like. Operating margins for Alphabet, they're expected to be around 31%, indicating 140 basis point improvement margin-wise. This margin expansion is going to be a key focus, of course, and it demonstrates companies' efficiency in managing costs. Obviously, we're going to be looking at regulatory and legal stuff there as well. They're expected to showcase strong financial performance driven by advertisement and cloud. And so I think with that looking at Google under that lens, I think the market is going to be more strict in terms of Google. What do I mean by that? Meaning like we're going to have less positive momentum if we come in good. And more positive momentum or more negative momentum if we come in outside of these expectations. Now, I might be wrong here. Again, not an investment professional. No idea what any of these are going to show up as. Again, we're just kind of sitting back waiting here. But, yeah, let me know what you guys think. Tesla bot. Are we going up or down? Nobody knows whether we're going to go up or down. Genuinely, nobody knows. All right, SPY testing the previous closing price, trying to go red. The Tesla bot, also known as Optimus, is an advanced humanoid robot developed by Tesla. It's designed to perform tasks that are repetitive, dangerous, or boring. It's got a humanoid design. It's designed to resemble a human with 2 legs, 2 arms, and a head. It is about 5'8", weighs around 125 pounds. Means it's capable of performing most tasks that humans can do. It's equipped with 40 electromechanical actuators, allowing it to move its limbs and perform tasks with its hands, like complex stuff. It also uses the AI tech as Tesla's self-driving. This is kind of like Renaissance Man. No, is it Renaissance Man? Bicentennial Man. Anybody that's old like me remembers that movie. Autobots, Energy, FSD, 1 or 2 of them would be enough to make me very bullish. Bear divergence on NASDAQ. Yeah, I mean, I think what we're seeing a lot right now is sideways neutral activity leading into everything. I think, how do you say things that are boring? Depends on who you ask. I'm assuming by boring, they mean repetitive. Like, I find it boring to have to walk to get a glass of water from the kitchen. And so the Tesla bot, I'm sure, is going to help solve that problem for some people. Again, I don't find it necessarily boring, but it's going to save time. And time is money, you know? And so in that regard, it might be beneficial. Again, NASDAQ right under 20K. Just under it. You know, we're at 19,961 for the NASDAQ. So just under that level. The SPY actually technically red on the day now, believe it or not. Would you play the S&P 500, the NASDAQ after earnings? I mean, it depends on the setup. I'm not just going to say, oh, buy the NASDAQ or buy the S&P. Nobody really knows there, and it really ultimately depends on a lot of nuance. What is the most extended in the opposite direction that I want to play? You know, there's just a lot of stuff that I would have to ask myself. Yeah, Tesla can miss and go up. It could also do well and go down. You know, you don't really know. Nothing's that predictable earnings-wise. That's the biggest misconception a lot of people get with earnings, is that they think everything's going to be wildly predictable and easy and that they're going to be making all this money because if they just wait for Tesla to report good numbers, it's going to go up, or if they wait for Tesla to report bad numbers and short it, it's going to go down. And very quickly, I think people realize that the market is simply not that easy. Unfortunately, it's just not that easy to do anything on the market. Like, the market will do whatever it wants to do, and there's not really any controlling it. Extension plays a big factor. Like, what happened over the last few weeks is big. You know, NASDAQ breaking down, SPY breaking down. So we got some movement there. I should have stayed in my short. Honestly, my short idea works, bro. I'm saying my short idea works. I should have kept chugging away at that short. Again, I'm gonna go much bigger size. I'm gonna go much bigger size, like FOMC days and stuff like that. But again, the idea here, very simple. Tesla ahead of earnings usually is gonna remain choppy, and so in that regard, usually the move is to like buy the lows, sell the top. You know, play this choppy, neutral, rectangular range. It's a powerful system if you're patient enough to wait. Like, some people were trying to make fun of my shorts where I talked about the strategy by saying, oh, so you're just telling us to buy the lows and sell the highs, or buy the bottom, sell the top, or buy it when it's down and sell it when it goes up. And you could simplify any trading strategy in the same way. You could reduce any system, regardless of how complex it is, to that same saying, regardless of how good or bad it is or anything like that. And so, yeah, of course you want to buy it low and sell it at the highs, you know, that's obvious. But I think the point of this system and strategy, the reason I keep going over it is because I'm trying to really reinforce, kind of like say this over and over again so people get it. What I'm saying is that the edge in terms of how probable it is for this position, if you buy it here, to go up, how probable it is for this position right here to go up, you know, how probable it is for this position here to go up if you buy it at those lows. The probability goes super high if you can wait for specific events in which contribute to choppy, neutral, sideways activity. That's the time to play these strategies, and I think it makes perfect sense, and I think it's worked really well. And so, yeah, I'm not saying you should short Tesla if you don't want to short it. I'm not really a big shorter there, but I'm in Tesla. I want it to go up. It's a long-term position. Our average price on Tesla is 176. Our previous average was like 140s. But yeah, we're in at 176 for Tesla here, and it's rising. We'll see if it continues going up. We asked everybody on Twitter what they thought of Tesla Q2 earnings. 67% think beat, 33% think they're gonna miss. So hey, we'll see. Disney, big drops this morning, honestly. Disney down to 91s. It's bounced back a little bit though. I took a third of the position off. I just don't trust it. You know, I just don't trust it. Same thing with SPY and Q today, leading into these earnings reports. Also, definitely not financial advice. I have no freaking idea what's gonna happen with any of this stuff. No idea what's gonna happen. Gonna beat but still drop 4%. Not being greedy and panicky. DCGM reversal. What did UPS end up doing? Man, GM had a huge negative reaction. Same thing with UPS. Again, I got out slightly green on UPS, but it's neutral trade mostly. Nike, I don't think is down 70%. Nike, I mean, it's all relative to like where you look at it from. Well, yeah, I guess you could say it's down. I don't know. What is Nike down there? What's percentage-wise here? Yeah, Nike's down 60% from its highs, you know, but I don't know if we could look at it from the highs. I still think it's probably time to buy up Nike. Nike's still a very strong company, but I might be wrong here. I think you just I gotta just be patient with it. Definitely a red day. But you know, I'm up thousands on the year. Like, my portfolio can handle sitting through some of this stuff, and if it takes longer to get, like, it takes longer, it's all good, you know. Obviously, I'm not really living off of my investment profits. They're just investments. We'll see if they continue to pay me well. How is CrowdStrike recovering? Honestly, I was in CrowdStrike this morning, and I rode the bounce back a lot. And, you know, I got out right around where it is now, so I'm okay. You know, but I made money on it. Who knows what it's going to do? Is Tesla a strong buy? I mean, I have no idea. I hope so. You know, I want it to go up. I'm in it right now. I think I like Tesla. So I think they're cool. And I think people overestimate weakness and underestimate their strength. But who knows, man? We'll see. Remember, boys, it's John's fault that our portfolio is up 70%. It always is, guys. Listen. Definitely top 3 most wrong trader in the world right now. Again, Tesla expecting 59 cents a share on 25 billion in revenue. We're just going to call it 25. 25 is like the very top, like the tippity top of the range of analysts' expectations for revenue is at 25 billion. Still, if we break that, that's going to be its largest. Tesla has a chance to break and be the largest. Tesla has a chance to break and be the largest revenue quarter, right? It's ever had. So the previous largest revenue quarter, it would have to wildly exceed expectations. But the previous largest revenue quarter was 25.35 billion, right? So 25.3 or 25.16 billion is where they showed up as 25.16. So Tesla's previous best was 25.16. This is the record. Today they are expecting 24.97 billion. So will they break the record? They could. It's unlikely, but will they break it? They'd have to hit this number to break their all-time revenue. You know, it's super unlikely. The top of the range for revenue is 24.97. You know, a lot of analysts are actually expecting it more at like 24.4 or something like this, right? So, you know, hundreds of millions less. I hope they do it. It's just not super probable, right? The real question is, how does the market react? Tesla, like, I think when we look at extension for Tesla over the last when we look at extension for Tesla, you know, over the last 4 months, Tesla's up a huge percentage over the last 4 months. Like, percentage wise for Tesla was at 140 4 months ago. It's now at 250s basically. So at its current place, Tesla is up 80% in the last 4 months relative to the lows of the last 4 months. Now, I don't really know if I would call that like the average price for Tesla, of course, but it is up relative to the lows it put in. You know, even these lows. Tesla's a lot of people call Tesla a meme stock. I don't like calling it that, but yeah, Tesla's up a huge percentage. It's up almost 80% in the last 4 months from its lows at 140. You know, it went as high as 270s here. So, I mean, if we look at that level, it was up 92% since the 140 level. So it's gone up a lot, but you can kind of see Tesla is really well known for that. Just really big ranges, up and down, huge ranges here. So, you know, not really the lowest volatility stock in the world. SPY started to bounce back, you know, kind of confirming that choppy range and trend. But again, I think we got a really obvious level here. Tesla's up 50% in the last month. Yeah, so I think we got to look at that extension objectively, I think, as well, right? Like, I think we have to look at that extension and understand that there might be some deep extension for Tesla, like moving into, you know, their earnings. I think we might get deep extension moving into it. Maybe not. Again, maybe that means we're going to be more strict on Tesla. I don't know. But, yeah, we'll see. All right, guys, let me check the chat. What market hotspots do you predict? Farm, auto, tech, housing? Should have bought Tesla a month, 2 months ago. They are both owned by Tesla. Should have bought Tesla 2 months ago. Who's Elon? I don't know. Who is he? 3D printing houses? Yeah, I mean, I think the real estate market needs something like... Real estate market needs to bounce. Like, it's been hella weak commercially. Residential's okay. I think the residential needs to correct, though. Like, residential has gone up dramatically in 5 years, like 60% in 5 years. A lot of people's house prices doubled over the last 5 years or versus 10 years ago. And so, you know, a lot of them are kind of unhappy in terms of inflation, but they don't realize that prices going down, including house prices, is what's necessary to correct it, you know. Historically, the only way to get prices to really literally go down is recessions and more depressions, recessions, stuff like that. But outside of that, we can only slow prices down, and you slow them down by keeping interest rates high, discouraging the economy so that people stop spending as much. And that's the best way to combat inflation, which is what we need. But I don't think it's what people want right now. I think, you know, you're going to have a lot of complaints. Real estate won't correct until rates unlock. Right, but they need to. Rates need to stay high, and house prices need to correct some. You know, I'm biased, but that's my. Yeah, I don't want to go into that. We talk about that a lot in our morning streams. In 5 to 10 years, Tesla should get another trillion. Maybe. I hope so too. Honestly, we'll see. All right, guys, we got 6 minutes until the closing bell. Google earnings are scheduled to drop right at the close. So right as soon as the closing bell happens is when Google numbers are supposed to drop. We'll see what happens. It's a big earnings report. We'll see. You know, you got people talking about rate cuts 6 months ago. A lot of these guys just don't understand. SPY just cracked lows right before the open. Do they know something that we don't? I'm going to put Google up here. Class A shares for Google. Google drops right at 4 p.m. Eastern Standard Time. A lot of stuff just turned. So, you know, again, Tesla's getting affected by it, but we got a lot of stuff that just turned. The SPY just turned, breaking lows of the day here. SPY just broke under all the lows of the day, under the previous closing prices at 553.30s if we look at it. Google's heading towards this level. Tesla seems unaffected by it, but the market is correcting right now a little bit. All right, so OpenAI reportedly moves AI safety leader Majory to a different role within its recent research organization, according to the information report. So a lot of talks about advanced talks between Google and Wiz reportedly failed due to a faulty software update from CrowdStrike, according to Bloomberg. So again, we'll see what happens here. We still got about 5 minutes before the close. Google earnings are set to drop right at the closing bell. Like right at the close, we got Google earnings. Rate cuts coming. I don't know, man. I hope not. I genuinely hope not. You know, like people think rate cuts are going to help them. Of course it's not. Unless you're directly involved with real estate and you benefit from like massive strength in real estate, like cuts are going to make inflation worse and prices go up, and people are going to be paying more prices, like more money, higher prices in a year than they are this year. And then they're going to be complaining about that, acting like this wasn't a predictable thing. When rates get cut, prices go up, you know. SPY at 553s right now, 553s. We'll see what happens. Yeah, it's a big drop. You know, again, we'll see. We got about 3.5 minutes until the close. We'll see what that looks like. Google has to go up and the bull market is over? I don't think so. I think it's too early to tell yet. I think I think with the I think it's silly because look, here's a yearly chart for Google. So we're saying this means the bull market is done. This, you know, I mean, I'm in Google. I want Google to go up. I'm in Tesla too. I don't know if Google will drop. Google was dropping prior to the close, but that doesn't mean anything. It's just short-term price action. Yeah. Again, here's the S&P, right? So we're saying, just to clarify, we're saying this means the bull market is done. Maybe, I mean, listen, if the bull market's going to be done, it's probably going to be during earnings, you know? So maybe that's what it means, but who knows? We'll see. All right, we got Google earnings, guys. Let's see what this looks like. 2 minutes. And then if Google goes down. All right, here we go. A minute and a half left, guys. Google earnings set to drop right at the closing bell. Tesla earnings actually scheduled to drop about 10 minutes after the close. So we'll see. It's time. Yeah, August, September, July, late July, August, and September are pretty bad months for trading overall, realistically. We'll see what it looks like. We got about a minute left. Chat, a minute left. All right, 1 minute. Remember, we don't just have Tesla. We have Google. GOOGL is scheduled to drop right at 4 p.m. Class C shares are scheduled to drop at 4:05. Enphase is scheduled at 4:05. Visa is scheduled at 4:05. Tesla scheduled at 4:10. And that's mostly all the big ones that drop. So, you know, a lot of the big ones drop at 4:05, 4:10 market time. Here we go. We have about 30 seconds left. Make sure you hit the live button next to the play button. I'm going to put Google up here. I'm going to put the Class A shares up because these are the more valuable shares. We're going to put Class A up here. Here we go. All right, let's get ready. And there's the closing bell. Watch for Google. All right, watch for Google. There's the closing bell. Watch for volatility in both of these. We'll try to cover all the stuff that drops, but watch for volatility in all of this. Waiting. Waiting. Google at 182s. No big volatility yet. Waiting, chat. Waiting. We got Google, Tesla, Visa, Texas Instruments, a lot of other stuff today. Google at 182s. Still nothing. All right, so we're 1 minute after the closing bell. We don't have much yet. Showed up. Tesla just got a lot of big volatility that showed up. Nothing yet for Google though. Waiting. Still waiting here. Honestly, it's kind of like they're late. Maybe we're waiting for 405. Yeah, 2 minutes after the close, nothing yet. The only other one that's Texas Instruments, but I don't think it's out yet. See what we get. All right, so Texas Instruments out. Texas Instruments posted 122 versus 117. We'll post these in chat. Okay, there's Google up. Google up to 184 is finally getting a reaction here. It's not a big reaction, though, for earnings, but it's somewhat of something. It's at 183s, 184s for Google. So we are seeing somewhat of a reaction here for Google. Nothing yet, though, I don't think, unless we're late. Tesla's still waiting to drop. And there's the big reaction to the downside. And then a big retracement. All right, so Tesla numbers, still waiting on those. Google. I'm going to put X up here and see if we can find the Google numbers. All right, Google second quarter revenue showed up at 84 Google second quarter revenue showed up at 84.7 billion. They expected 84.1, so higher than expected. Quarter two net income came in at 2.36 bill. Quarter two EPS came in at 189 versus 184, higher than expected everywhere for Google. Downward responses here, though. Downward action here. Tesla's down. Looks like Tesla earnings might be out. Again, here's Google. There's Google right there. We're waiting on Tesla numbers right now. Tesla's at 242s, 241s. All right, guys. So again, we're still waiting here for Tesla. Let's see if they're out. Yeah, they should be. All right, so Tesla beat. Tesla posted 42-cent EPS. They actually missed estimates there. Quarter two net income or adjusted EPS at 52 cents. So they still missed there. What was their revenue? Tesla posted 52 cents, revenue of 25.5 billion. Crushed it for revenue. Honestly, I'm surprised. This is their highest revenue quarter ever. Let me make sure. Let me confirm this is their highest revenue quarter ever. But yeah, Tesla posted their highest revenue quarter ever here at 25.5 billion in revenue for Tesla. 25.5 billion in revenue. Again, we'll put this up here. Tesla beat their highest quarterly revenue ever. I'm surprised they're down. That's weird. Google started to bounce back too. Google at 182s, 183s. So we'll see. Now we're at 184s for Google. Again, Tesla at 246. But again, Tesla had their largest quarter ever in revenue. We'll cover the rest of the numbers as we get them, but Google killed it as well. Yeah, so Tesla posted 52 cents versus 62 cent estimate. Sales beat at 25.5 billion, their highest quarterly revenue ever. They're kind of flat from this, though, I guess. We'll look more into their earnings report to see if we figure out why. Google's actually up a little bit. So Google posted better than expected EPS and revenue. Most of Google's numbers are out. Tesla's kind of choppy and neutral, though. All right, so we're going to cover this. All right, Tesla down to 243s. Yeah, interesting. Again, we're at 243s here, chat. 243s. All right, Visa's out. Visa posted 251 EPS versus 243 expected. Revenue of 8.9. They expected 8.89, so slightly better. Tesla about to break lows, chat. So Tesla about to break lows. There's Visa's numbers in chat. Hey, thanks, Easy. Yeah, we're going to put it in sub-only mode as well. So we appreciate it. We'll probably, you know, Tesla's earnings call is not for an hour and a half. We'll probably cover Google's earnings call as well, I think. But Google started to break highs. Looks good. There's a lot of stuff going on with Google recently, so I think it's only right to cover it. Right. So, yeah. But yeah, so Google posted second quarter. I think Google reports at 4:30 or yeah. Tesla all the way back up to 244s. I'm shocked. Like, again, typically revenue trumps EPS, right? So generally speaking, revenue is more influential than EPS, right? So even though Tesla missed EPS, their revenue was their greatest revenue quarter ever. So it's kind of interesting how, you know, yeah, it's interesting how they've had this negative reaction, you know, but hey. All right, guys. So, like I said, we're gonna go and we're gonna cover Google earnings. We're gonna cover the actual Google earnings call here, and then probably switch over to Tesla's earnings call once we get it. All right, we'll see if they hold. But yeah, Google up big, guys. So let's get ready. All right, so look at Tesla coming all the way back down to 239s here, chat. Yeah, Google's out already. So here's Google right here. So we'll put Google up. We'll put both of these up right now. And again, we're covering both of these today. There's all of them. Google, Tesla down. Mattel just posted 19-cent EPS versus 17-cent expected. Revenue of 1.08 versus 1.1 expected. There's Mattel. Actually, we'll put this up in chat. Yeah, Enphase also reported earnings. Is Enphase out yet? They were supposed to drop at 405. I don't see them listed here. We're trying to do our best to cover them, but yeah. So Tesla hitting 240s. Chat 240s. Yeah, so here's Google. Google's mostly flat here. And again, Google posted these numbers, so we'll throw these up on screen. Says Tesla plans for new vehicles, including more affordable models, remains on track for start of production in the first half of 2025 here. So we're going to put some of the updates for Tesla's story here up in chat. Tesla reported Q2 non-GAAP earnings 52 a share. Tesla revenue increase was due to energy generation and storage growth, Cybertruck deliveries, and higher regulatory growth revenue. So we're going to list some of these in chat right now. In 2022, growth rates of energy storage and deployment and revenue and generation storage business should outpace the automotive business. 2024 vehicle volume growth lower than 23 due to launch of next-gen vehicles like the Cybertruck is what they said. So far, slightly down reaction from Tesla, not a huge dip. Google actually gapping down more here now, so we'll see what this looks like moving forward. Seagate Tech also posted numbers here. They posted 105 versus 75 cents. Revenue of 197 billion versus 187. Quarter one adjusted EPS is 160 for guidance versus 225. So much worse guidance for STX. I'm not anything. I'm surprised they're gapping up there. They had pretty bad guidance, but it's a different story. Again, Google at 179. We also have GOOG. So the slightly different stocks. The GOOG is Class C shares, which ultimately have less voting rights. If you want to know the difference between Class A and Class C shares ultimately have less voting rights. Class A shares have more voting rights and are ultimately more valuable shares, slightly more valuable. So, yeah, I bought the dip in CrowdStrike this morning, actually. Google lacks cloud revenue. Yeah. So again, Tesla saying Google had a lot of stuff that dropped too here. And again, we're going to cover the earnings call for Google live in about 5 minutes. We'll put the timer in about 15 minutes. We'll put the timer up for this while we wait. Yeah, this is in about 16 minutes for Google's earnings call. And again, Google at 181s, so we're watching for it. Yeah, Tesla's okay. It's gapping down a little bit, but it's not a huge drop. Thoughts on CrowdStrike going forward? I don't know, man. I don't know enough about CrowdStrike as a company to really say yes or no. But yeah, Google did good. So Google came in at YouTube. I'm going to start listing some of the Google's numbers in chat. So YouTube ad revenue came in at 8.66 bill. Quarter two advertising revenue came in at 64.62 billion. Search came in at 48.51. Services came in at 73.93 billion. Second quarter Google Cloud revenue came in at 10.35 billion. Second quarter traffic acquisition costs came in at 13.39 billion. Second quarter operating income came in at 27.43 billion. Second quarter operating margin was at 32%. Yeah, so it's interesting. Tesla breaking lows here, guys. So Tesla just cracked lows down to 236s. SPY starting to test the bottom of this range here ahead of the earnings reports. I'm not sure how much the earnings reports are going to influence it. Know that I'm not trading this and I'm just a spectator. Yeah, it's all good. We're not giving picks out. We're just speculating, you know. YouTube revenue missed. Yeah, some of it. I mean, it came in at 84.74. It came in at slightly better than expected for sales and revenue. Sales were expected at 84.2. They came in at 84.74 for revenue. So they actually did a little bit better than expected for rev. And again, they're pretty flat. Tesla breaking all the way down to 233s. So there's 234s. Hey, all good, Lucia. All right. Yeah, very strange fluctuations and everything here, man. So, like, I spoke to a friend of mine that does TikTok, and she said that, like, all viewership for them are down, too. Like, there's just, ever since the CrowdStrike thing, it's been off. Yeah, I mean, we had almost 1,000 people here for Tesla earnings. It's the middle of the summer. It's the slowest part of the year, you know. 1,000 people. If I was in front of 1,000 real people, I'd probably freak out. So, I mean, we can act like it's not a lot, but, you know, it's all good. We'll see what the earnings call looks like for both of these. You know, we still got an hour, basically, until Tesla earnings come out. So we'll cover Google earnings, and then we'll probably redirect to the actual earnings call for Tesla is probably what we'll do. So stick around. We're going to see what happens. Tesla all the way down at 234s. 234s. Back up to 235s, getting a little bit of a downweight. Google sitting right in the middle flat. Like right flat in the middle. What up, yo? Had to stop by. What's up, V? Hey, thanks, Mike. Why is everything down? I don't know. Is in-phase out? I haven't seen in-phase numbers. In-phase is out. They posted 8-cent profit. They expected 48 cents profit. Or adjusted came in at 43 cents, so they missed. Here's in-phase's numbers right here. They posted 303 sales. They missed on both metrics for in-phase. Rest in peace to all my bulls out there. You get them next time. I mean, like I said, my average price in Tesla right now is 170s. So I mean, it can drop, you know, it can drop $10 a share, and I'll be okay. I think, you know. Huge profits for today. Yeah, looking at our poll numbers here. Let's end this poll and go to a different poll here. So again, we're going to end this poll, go to a different poll. 49% think they would beat. And I do think this is a beat for Tesla. It's mixed results. Does Google's earnings call are you bullish or bearish on today's Google Alphabet earnings call? All right. Hello? Man, my dog's in panic mode. My dog's over here yelling. Panic mode. All right. So, yeah. So I got the package. Honestly, this thing's pretty cool. So I got my wife this for our anniversary. Let me make sure she's not on the line. Okay. Let me see if it'll let me open it. I need some scissors here. I'll show you guys what I got my wife for her anniversary. So my wife really likes, look at Tesla bounce all the way back up here. Tesla at 230s or 320s. Chat, 320s. Let me make sure. So my wife really likes monarch history. Right, so my wife really likes monarch history, like King Henry VIII and all that stuff. So what I got her is a certified coin with King Henry VIII on it. Look at that. Give you some light here. Let me show you some light. I don't know if you guys can see it, but it's pretty cool. It's got King Henry VIII on it. I thought it was cool. Anyways, Google bouncing back. It's at 186s. Tesla at 238s. So Tesla bounced all the way back. I mean, it's still red. Google actually pretty still green on the day. Tesla hasn't reported yet, though. Tesla reported 20 minutes ago, 15 minutes ago. Yeah. That's my dog, Bruce. He's a good dog. He'll guard our house with vengeance and fury, though, if you try to break in here. All right, guys. I get some people might be shorting Tesla. I'm not even mad at you. I don't know if they expect me to be like, no, don't short Tesla. Please stop. Y'all can short Tesla. It doesn't matter that much to me. It's not gonna. My bias isn't gonna influence anything. Like the Tudor dynasty, Jeff. She likes like the histories of the Tudor dynasty, and I should have figured. My last name's London, so I'm sure she loved my last name when she first met me. I'm obviously English or British. I did a DNA test. Again, the results of that were interesting as well. I'm 60% English, 30% French, a bunch of other small percentages. My third largest percentage is actually sub-Saharan African, so I've got about like 4% African, in me. So interesting. I'm from Louisiana originally, so. But yeah, my middle name is Viking. It's Nordic. I'm not going to tell you what my middle name is, but anyways, guys, hey, we got these 7 minutes left until the earnings call. 7 minutes left. I would never short a meme stock. Hey, good luck, dude. Would Ragnar? No, it's not like that. Y'all would never guess my middle name. It's super Nordic though. It is Nordic, but you would never guess it. We watched the first season of Viking, but we never actually finished it. She makes me watch like Versailles a lot. Like she watches like Versailles. Like she makes me watch a bunch of that stuff. She watched. There's a bunch of like King Henry VIII. King Henry was like a freaking scumbag, though. Like Henry VIII. That dude was a scumbag, This thing's pretty cool. I'm always bad with gifts. Like I never, Alright, anyways. Yeah, King Henry's the one that like murked a bunch of his wives. But he also had kind of like a stanky leg. And so his leg was all like beat up. They used to like do a lot of weird stuff, and then his leg was like never healing, so it was always open and never healing because they thought that keeping it open and like draining it or something made it better. How stupid humans were at the time. Anyways, so he had like a really stinky leg, and like apparently he was really gross, and so his wives, I don't know, man. I'm not saying the wives deserved it. Okay, but one of them was like sending love letters or like cheating on him with somebody else. So it's like, look, if you marry a king who's murked a couple wives before you and you cheat on that king, I'm not saying you deserve it, but come on now. Like, I'm not sure what she was thinking, but I don't know what she expected to happen there. Thus is life, I guess. Anyways, Google at 186 is here, chat. No, I'm in Google. I've been in Google for a long time. My average price in Google is 156. But I've been in it for a long time. We're gonna keep holding it too. John Bourne. You can't lead to someone like that and not tell you. Y'all really want to know my middle name? It's just Nordic. It's not like Ragnar or whatever. I don't even know. It's not Bjorn or Axel or Anders or Helga or anything like that. Honestly, I couldn't even pronounce most of these. It's not a well-known Nordic name. But again, I'm not telling you, Again, I'm not giving you guys my social security number either. Y'all will be okay. We got 3 minutes here, chat. Tesla actually started to move up. It's at 240s. Thor? No. Norman? Yeah, I'm watching House of the Dragon. Honestly, my only complaint is that, here's the complaint, okay? The reason Game of Thrones was good is because they did lots of character development leading into the drama that happened. You cared about the characters. Game of Thrones, House of Dragon rushed it, and they've slowed it down so much in season 2 where nothing's freaking happening. Like, nothing's freaking happening. We've had 2 episodes now after the only big event of the season. I'm not going to spoil it, that basically nothing's happened. And I get, I don't know, man. I think they're too slow with the second season. I think if they're going to speed it up, they should just speed it up and let the stuff happen. I think the content for House of Dragon is, yeah, I don't know. Anyways, that's my big complaint. Yeah, so Mrs. YouTube ad revenue. We are here waiting for...
Welcome, everyone. Thank you.
Oh, wait, this is the old one. Ooh, I was about to say, I thought I missed it for a second. I was about to panic. Yeah, so here's quarter 2. We're waiting here. They're doing a Gemini ad. And we'll put this up on screen for Google so people can actually see it. There's Google on the right side. Here. Tesla's starting to bounce back, though. We'll see if it holds. Again, we're going to cover Tesla, too, so stick around. But we got a freaking hour until... Can y'all hear the music? You should be able to. Hey, thank you, OP. Yeah, Season 8, they rushed it for sure. All right, here, I'm going to mute the background and get ready. Yeah, all right. Yeah, Tesla's going back up. No dragons, no house, no good. I didn't get very far with it. I mean, there's dragons, bro. John Valhalla. Yeah. That'd be great if that was my name, but that's not my name. House of Dragon's good. I like House of Dragon. You don't get social security numbers if you were born in Louisiana. Yeah, that's true. You get 3 crawfish and a crab, in a gumbo pot. Go Tigers, The Saints, they're saying the Saints are going to be good this year. I don't know. All right, guys, here we go. Still waiting for the earnings call to start. What?
Thank you for standing by for the Alphabet second quarter 2024 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Director of Investor Relations. Please go ahead. Welcome, everyone.
Good afternoon,
everyone. Thank you for standing by.
Thank you. Good afternoon, everyone, and welcome to Alphabet's second quarter 2024 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Ruth Porat. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thank you, Jim, and hello, everyone. I'm really pleased with our results this quarter. They show tremendous ongoing momentum in search and great progress in cloud with our AI initiatives driving new growth. Search had another excellent quarter. And in terms of product innovation, we are seeing great progress with AI overviews. In Q2, cloud reached some major milestones. Quarterly revenues crossed the $10 billion mark for the first time, at the same time passed the $1 billion mark in quarterly operating profit. Year to date, our AI infrastructure and generative AI solutions for cloud customers have already generated billions in revenues and are being used by more than 2 million developers. As I spoke about last quarter, we are uniquely well positioned for the AI opportunity ahead. Our research and infrastructure leadership means we can pursue an in-house strategy that enables our product teams to move quickly. Combined with our model building expertise, we are in a strong position to control our destiny as the technology continues to evolve. Importantly, we are innovating at every layer of the AI stack, from chips to agents and beyond, a huge strength. We are committed to this leadership long term. This was underscored by the announcements we made at I/O, Cloud Next, and Google Marketing Live, and we'll touch on many of them here. Today, I'll start with search, then move to our AI momentum more generally, followed by cloud, YouTube, and some closing thoughts. Let's dive in. Over the past 25 years, we have continued to reimagine and expand Google Search across many technological shifts. With AI, we are delivering better responses on more types of search queries and introducing new ways to search. We are pleased to see the positive trends from our testing continue as we roll out AI overviews, including increases in search usage and increased user satisfaction with the results. People who are looking for help with complex topics are engaging more and keep coming back for AI overviews. And we see even higher engagement from younger users aged 18 to 24 when they use search with AI overviews. As we have said, we are continuing to prioritize approaches that send traffic to sites across the web. And we are seeing that ads appearing either above or below AI overviews continue to provide valuable options for people to take action and connect with businesses. Beyond AI overviews, AI expands the types of queries we are able to address and opens up powerful new ways to search. Visual search via Lens is one. Soon you'll be able to ask questions by taking a video with Lens. And already we have seen that AI overviews in Lens leads to an increase in overall visual search usage. Another example is Circle to Search, which is available today on more than 100 million Android devices. We are seeing tremendous momentum from our AI investments. More than 1.5 million developers are now using Gemini across our developer tools. And we recently unveiled new models that are more capable and efficient than ever. Gemini now comes in 4 sizes, with each model designed for its own set of use cases. It's a versatile model family that runs efficiently on everything from data centers to devices. At 2 million tokens, we offer the longest context window of any large-scale foundation model to date, which powers developer use cases that no other model can handle. Gemini is making Google's own products better. All 6 of our products with more than 2 billion monthly users now use Gemini. This means that Google is the company that's truly bringing AI to everyone. Gemini is powering incredibly helpful features in Search, Workspace, Google Messages, and more. At I/O, we showed new features coming soon to Gmail and to Google Photos. Soon you'll be able to ask Photos questions like, "What did I eat at that restaurant in Paris last year?" For a glimpse of the future, I hope you saw Project Astra at I/O. It shows multimodal understanding and natural conversational capabilities. We've always wanted to build a universal agent, and it's an early look at how they can be helpful in daily life. Our AI product advances come from our long-standing foundation of research leadership, as well as our global network of infrastructure. In Q2, we announced our first data center and cloud region in Malaysia and expansion projects in Iowa, Virginia, and Ohio. Our TPUs are a key bet here too. Trillium is the 6th generation of our custom AI accelerator, and it's our best performing and most energy efficient TPU to date. It achieves a near 5x increase in peak compute performance per chip and is 67% more energy efficient compared to TPU v5e. And the latest NVIDIA Blackwell platform will be coming to Google Cloud in early 2025. We continue to invest in designing and building robust and efficient infrastructure to support our efforts in AI, given the many opportunities we see ahead. Of course, as we do this, we'll continue to create capacity by allocating resources towards our highest priorities. We are relentlessly driving efficiencies in our AI models. For example, over the past quarter, we have made quality improvements that include doubling the core model size for AI overviews, while at the same time improving latency and keeping cost per AI overview served flat. And we are focused on matching the right model size to the complexity of the query in order to minimize impact on cost and latency. Separately, on our real estate investments, we are taking a measured approach to match the current and future needs of our hybrid workforce, as well as our local communities. Next, Google Cloud. We continue to see strong customer interest, winning leading brands like Hitachi, Motorola Mobility, and KPMG. Our deep partnership with Oracle significantly expanded our joint offerings to their large customer base. Our momentum begins with our AI infrastructure, which provides AI startups like Essential AI with leading cost performance for models and high-performance computing applications. We continue to drive fundamental differentiation with new advances since Cloud Next. This includes Trillium, which I mentioned earlier, and A3 Mega powered by NVIDIA H100 GPUs, which doubles the networking bandwidth of A3. Our enterprise AI platform, Vertex, helps customers such as Deutsche Bank, Kingfisher, and the U.S. Air Force build powerful AI agents. Last month, we announced a number of new advances. Uber and WPP are using Gemini Pro 1.5 and Gemini Flash 1.5 in areas like customer experience and marketing. We broaden support for third-party models, including Anthropic's Claude 3.5 Sonnet, and open-source models like Gemma 2, Llama, and Mistral. We are the only cloud provider to offer grounding with Google Search, and we are expanding grounding capabilities with Moody's, MSCI, ZoomInfo, and more. Our AI-powered applications portfolio is helping us win new customers and drive upsell. For example, our conversational AI platform is helping customers like Best Buy and Gordon Food Service. Gemini for Workspace helps Click Therapeutics analyze patient feedback as they build targeted digital treatments. Our AI-powered agents are also helping customers develop better quality software, find insights from their data, and protect their organization against cybersecurity threats using Gemini. Software engineers at Wipro are using Gemini Code Assist to develop, test, and document software faster. And data analysts at Mercado Libre are using BigQuery and Looker to optimize capacity planning and fulfill shipments faster. Cybersecurity risks continue to accelerate, and the number of breaches continue to grow, something we all see in the news every day and that our Mandiant teams help manage. Our strong track record of uptime, quality control, and reliability make Google Cloud the trusted security choice for organizations like Fiserv and Marriott International. In Q2, we infused AI throughout our security portfolio, helping TELUS strengthen its proactive security posture. Turning next to YouTube. YouTube is focused on a clear strategy, connecting creators with a massive audience and enabling them to build successful businesses through ads and subscriptions while helping advertisers reach their desired audience. We had a great brandcast this quarter, and Philip will say more. I'm pleased at the progress here. YouTube has remained number one in US streaming watch time, according to Nielsen. Views of YouTube Shorts on connected TVs more than doubled last year, and we are making it easier for creators to add captions and turn regular videos into shorts. Next, on Android and Pixel. We joined Samsung for their Galaxy Unpacked event a few weeks ago, and we shared that Samsung's new devices will include the latest AI-powered Google updates on Android. It was a great event. I'm looking forward to our Made by Google event happening in August. We'll have lots to share around Android and the Pixel portfolio of devices. Our Pixel line is doing well. We recently introduced a new Pixel 8a, powered by our latest Google Tensor G3 chip. It provides beautiful AI experiences like Circle to Search, Best Take, and a Gemini-powered AI assistant. In other bets, I'm really pleased with the progress Waymo is making, a real leader in the space and getting rave reviews from users. Waymo has served more than 2 million trips to date and driven more than 20 million fully autonomous miles on public roads. Waymo is now delivering well over 50,000 weekly paid public rides, primarily in San Francisco and Phoenix. And in June, we removed the waitlist in San Francisco so anyone can take a ride. Fully autonomous testing is underway in other Bay Area locations without a human in the driver's seat. Before I close, I want to acknowledge that today is Ruth's final earnings call. Let me take a moment to thank her for all she has done for Google and Alphabet as our longest-serving CFO. I'm excited to continue to work with her in her new role. And I look forward to welcoming our newly appointed CFO, Anat Ashkenazi. She starts next week, and you'll hear from her on our call next quarter. Thanks, as always, to our employees and partners everywhere for a great Q2. With that, over to you, Philip.
Thanks, Sundar, and hello, everyone. Starting with performance, Google Services delivered revenues of $73.9 billion for the quarter, up 12% year-on-year. Search and other revenues grew 14% year-on-year, led by growth in the retail vertical, followed by financial services. YouTube ads revenues were up 13% year-on-year, driven by growth in brand as well as direct response. Network revenues declined 5% year-on-year. In subscriptions, platforms, and devices, year-on-year revenues increased 14%, driven again by strong growth in YouTube subscriptions. For the rest of my remarks, I want to double-click on two topics. First, how we are applying AI across the marketing process to deliver an even stronger ads experience. Second, YouTube's position as the leading multi-format platform. So let me start by sharing some of the ways we're applying AI to bring more performance benefits to even more businesses. Q2 brought several major opportunities to meet and learn from users, developers, creators, and customers. From I/O to Brandcast, Google Marketing Live, and Cannes, a growing number of our customers and partners are looking to understand how to successfully incorporate AI into their businesses. This quarter, we announced over 30 new ads, features, and products to help advertisers leverage AI and keep pace with the evolving expectations of customers and users. Across search, PMax, demand gen, and retail, we're applying AI to streamline workflows, enhance creative asset production, and provide more engaging experiences for consumers. Listening to our customers, retailers in particular have welcomed AI-powered features to help scale the depth and breadth of their assets. For example, as part of a new and easier-to-use Merchant Center, we've expanded Product Studio with tools that bring the power of Google AI to every business owner. You can upload a product image, prompt the AI with something like, feature this product with Paris skyline in the background, and Product Studio will generate campaign-ready assets. I also hear great feedback from our customers on many of our other new AI-powered features. We're beta testing virtual try-on and shopping ads and plan to roll it out widely later this year. Feedback shows this feature gets 60% more high-quality views than other images and a higher click-out to retailer sites. Retailers love it because it drives purchasing decisions and fewer returns. Our AI-driven profit optimization tools have been expanded to Performance Max and standard shopping campaigns. Advertisers who use profit optimization and smart bidding see a 15% uplift in profit on average compared to revenue-only bidding. Lastly, Demand Gen is rolling out to Display and Video 360 and Search Ads 360 in the coming months, with new generative image tools that create stunning, high-quality image assets for social marketers. As we said at GML, when paired with Search or PMax, Demand Gen delivers an average of 14% more conversions. The use cases we're seeing across the industry show the incredible potential of these AI-enabled products to improve performance. Let me briefly share two examples with you. Luxury jewelry retailer Tiffany leveraged demand gen during the holiday season and saw a 2.5% brand lift in consideration and actions, such as adding items to carts and booking appointments. The campaign drove a 5.6 times more efficient cost per click compared to social media benchmarks. Our own Google marketing team used demand gen to create nearly 4,500 ad variations for a Pixel 8 campaign shown across YouTube, Discover, and Gmail, delivering twice the click-through rate at nearly a quarter of the cost. In addition to strengthening our ads products for customers, we continue to evolve our existing systems and products with improved models, delivering further performance gains. In just 6 months, AI-driven improvements to quality, relevance, and language understanding have improved broad match performance by 10% for advertisers using smart bidding. Also, advertisers who adopt PMax to broad match and smart bidding in their search campaigns see an average increase of over 25% more conversions or value at a similar cost. We'll continue to listen to our customers and use their feedback to drive innovation across our products. As you can hear, I continue to be excited about the AI era for ads. Now let's turn to YouTube. I've talked before about our approach to making YouTube the best place to create, watch, and monetize. First, the best place to create. What sets YouTube apart from every other platform are the creators and the connection they have with their fans. Audiences tuning in to watch their favorite creators continue to grow. For example, 2 weeks ago, Mr. Beast's channel hit more than 300 million subscribers. Next, the best place to watch. Our long-term investment in CTV continues to deliver. Views on CTV have increased more than 130% in the last 3 years. According to Nielsen, YouTube is the #1 most watched streaming platform on TV screens in the US for the 17th consecutive month. Zooming out, when you look not just at streaming, but at all media companies and their combined TV viewership, YouTube is the second most watched after Disney. And this growth is happening in multiple verticals, including sports, which has seen CTV watch time on YouTube grow 30% year over year. Lastly, the best place to monetize. CTV on YouTube is continuing to benefit from a combination of strong watch time growth, viewer and advertiser innovation, and a shift in brand advertising budgets from linear TV to YouTube. Our largest advertisers across verticals, including retail, entertainment, telco, and home and personal care, are partnering with creators on ads and organic integrations. Verizon, for example, worked with a YouTube creator and Verizon customer to show the many ways that plans and offerings can be customized to fit people's lives. Using AI-powered formats, they created sketches in multiple lengths and orientations to serve the right creative to the right viewer and drive people to their site. Verizon's creator ads had a 15% lower CPA and a 38% higher conversion rate versus other ads. Turning to Shorts. Last quarter, I shared that in the US, the monetization rate of YouTube Shorts relative to in-stream viewing is showing a healthy rate of growth. Again, this quarter, we continue to see an improvement in Shorts monetization, particularly in the US. We're also seeing a very encouraging contribution from brand advertising on Shorts, which we launched on the product in Q4 last year. Lastly, a few words on shopping. Last year, viewers watched 30 billion hours of shopping-related videos, and we saw a 25% increase in watch time for videos that help people shop. While it's still early days, shopping remains a key area of investment. At GML, we rolled out several product updates to YouTube Shopping, helping creators sell products to their viewers. These updates included product tagging, where creators can tag products in their videos for viewers to discover and purchase, product collections, and a new affiliate hub, a one-stop shop for creators to find deals and promotional offers from brands and track their affiliate earnings. With that, I'll finish by saying a huge thank you to Googlers everywhere for their extraordinary commitment and to our customers and partners for their continued collaboration and trust. And Ruth, thanks for your amazing leadership and partnership over all these years. Now, for one last time, it's over to you.
Thank you, Philip, and thanks, Sundar, for those kind words. We had another strong quarter, driven in particular by performance in search and cloud, as well as the ongoing efforts to durably re-engineer our cost base. My comments will be on year-over-year comparisons for the second quarter, unless I state otherwise. I will start with results at the Alphabet level, followed by segment results, and conclude with our outlook. For the second quarter, our consolidated revenues were $84.7 billion, up 14%, or up 15% in constant currency. Search remained the largest contributor to revenue growth. In terms of expenses, total cost of revenues was $35.5 billion, up 11%. Other cost of revenues was $22.1 billion, up 14%, with the increase driven primarily by content acquisition costs, followed by depreciation, as well as the impact of the Canadian Digital Services Tax, which was applied retroactively. Operating expenses were $21.8 billion, up 5%, primarily reflecting an increase in R&D, partially offset by a decline in G&A, with sales and marketing essentially flat to the second quarter last year. The increase in R&D was driven primarily by compensation, which was affected by lapping a reduction in valuation-based compensation liabilities in certain other bets in the second quarter last year, followed by depreciation. The largest single factor in the year-on-year decline in G&A expenses was lower charges related to legal matters. Operating income was $27.4 billion, up 26%, and our operating margin was 32%. Net income was $23.6 billion, and EPS was $1.89. We delivered free cash flow of $13.5 billion in the second quarter and $60.8 billion for the trailing 12 months. As a reminder, last year we had a timing benefit in the second and third quarters from a $10.5 billion deferred cash tax payment made in the fourth quarter, which depressed reported free cash flow growth this quarter and will do so again next quarter. We ended the quarter with $101 billion in cash and marketable securities. Turning to segment results. Within Google Services, revenues were $73.9 billion, up 12%. Google Search and other advertising revenues of $48.5 billion in the quarter were up 14%, led again by growth in retail, followed by the financial services vertical. YouTube advertising revenues of $8.7 billion were up 13%, driven by brand, followed by direct response advertising. Network advertising revenues of $7.4 billion were down 5%. Subscription platforms and devices revenues were $9.3 billion, up 14%, primarily reflecting growth in YouTube subscription revenues. TAC was $13.4 billion, up 7%. Google Services operating income was $29.7 billion, up 27%, and the operating margin was 40%. Turning to the Google Cloud segment, revenues were $10.3 billion for the quarter, up 29%, reflecting first significant growth in GCP, which was above growth for cloud overall and includes an increasing contribution from AI, and second, strong Google Workspace growth, primarily driven by increases in average revenue per seat. Google Cloud delivered operating income of $1.2 billion and an operating margin of 11%. As to our other bets for the second quarter, revenues were $365 million, and the operating loss was $1.1 billion. Turning to our outlook for the business, with respect to Google Services, first within advertising, the strong performance of search was broad-based across verticals. In YouTube, we are pleased with the growth in the quarter. We had healthy watch time growth, continued to close the monetization gap in Shorts, and had continued momentum in connected TV, with brand benefiting in part from an ongoing shift in budgets from linear television to digital. As we look forward to the third quarter, we will be lapping the increasing strength in advertising revenues in the second half of 2023, in part from APAC-based retailers. Turning to subscriptions, platforms, and devices. First, we continue to have significant growth in our subscriptions business, which drives the majority of revenue growth in this line. However, there was a sequential decline in the year-on-year growth rate as we anniversaried the impact of a price increase for YouTube TV in the second quarter last year. The impact will persist through the balance of the year. Second, with regard to platforms, we are pleased with the performance in Play, driven by an increase in buyers. Finally, with respect to devices, the most important point as we look forward is that our Made by Google launches have been pulled forward into the third quarter from the fourth quarter last year, benefiting revenues in Q3 this year. Turning to cloud, which continued to deliver very strong results. For the first time, cloud crossed $10 billion in quarterly revenues and $1 billion in quarterly operating profit. As Sundar noted, year to date, our AI infrastructure and generative AI solutions for cloud customers have already generated billions in revenues and are being used by more than 2 million developers. We're particularly encouraged that the majority of our top 100 customers are already using our generative AI solutions. We continue to invest aggressively in the business. Turning to margins. The margin expansion in Q2 versus last year reflects our ongoing efforts to durably re-engineer our cost base as well as revenue strength. Our leadership team remains focused on our efforts to moderate the pace of expense growth in order to create capacity for the increases in depreciation and expenses associated with the higher levels of investment in our technical infrastructure. Once again, headcount declined quarter on quarter, which reflects both actions we have taken in the first half of the year and a much slower pace of hiring. Looking ahead, we expect a slight increase in headcount in the third quarter as we bring on new graduates. As we have discussed previously, we are continuing to invest in top engineering and technical talent, particularly in cloud and technical infrastructure. Looking forward, we continue to expect to deliver full year 2024 Alphabet operating margin expansion relative to 2023. However, in the third quarter, operating margins will reflect the impact of both the increases in depreciation and expenses associated with the higher levels of investment in our technical infrastructure, as well as the increase in cost of revenues due to the pull forward of hardware launches into Q3. With respect to CapEx, our reported CapEx in the second quarter was $13 billion, once again driven overwhelmingly by investment in our technical infrastructure, with the largest component for servers, followed by data centers. Looking ahead, we continue to expect quarterly CapEx throughout the year to be roughly at or above the Q1 CapEx of $12 billion, keeping in mind that the timing of cash payments can cause variability in quarterly reported CapEx. With regard to other bets, we continue to focus on improving overall efficiencies as we invest for long-term returns. Waymo is an important example of this, with its technical leadership coupled with progress on operational performance. As you will see in the 10-Q, we have chosen to commit to a new multi-year investment of $5 billion. This new round of funding, which is consistent with recent annual investment levels, will enable Waymo to continue to build the world's leading autonomous driving technology company. To close, this is my 56th and last earnings call, 37 of them at Alphabet, so I have a few closing thoughts of gratitude. I've been so proud to be at Google and Alphabet as CFO and to work with some of the smartest people in the world every day. I think we have accomplished a lot in the last 9+ years, and I am confident that progress will continue. Of course, I'm not going far, and I'm honored to have my new role, which I've been slowly working my way into during the past 11 months, and I look forward to continuing to work with Sundar and our great team. Being CFO of one of the most important companies in the world has been the opportunity and responsibility of a lifetime. Google's mission of advancing technology and bringing information to people throughout the world is as relevant today as it was when I worked on its IPO. Technology has been a catalyst for economic growth throughout human history. The people on this call know that if technological advancement is not the focus of every business and government, they will be left behind. Underpinning this is the need for sound and responsible investment. That has never been more important than today, and certainly that is Google and Alphabet's focus. I want to end by thanking Googlers around the world for the innovation and commitment that has enabled us to deliver such extraordinary products and services globally. I also want to thank our investors and analysts for your long-term support. and your feedback. Thank you. Sundar, Philip, and I will now take your questions.
Thank you. As a reminder, to ask a question, you will need to press star one on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. Your first question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Thanks for taking my questions. First, thank you, Ruth, for all the help and significant impact over the past decade. The first one, it's a little bit of a jump ball, I guess, for Sundar, Philip, or Ruth. I guess we're sort of 18 months into this fever pitch around a Gen AI focus in the world. Maybe from any of your perspective, can you just sort of talk to us about areas where you've seen faster than expected traction or testing adoption of some of the generative AI capabilities versus slower than expected traction and testing from a Google perspective? And then Ruth, appreciate all the comments about structurally re-engineering the OpEx base. Are there any more tangible examples of areas you can talk to us about where you still see further ways to drive more efficiency across the company? Thanks.
Brian, thanks. I'll take the first part. I think it's a good question. Obviously, I think there is a time curve in terms of taking the underlying technology and translating it into meaningful solutions across the board, both on the consumer and the enterprise side. Definitely on the consumer side, I'm pleased, as I said in my comments earlier, in terms of how for a product like search, which is used at that scale over many decades, how we've been able to introduce it in a way that it's additive and enhances the overall experience and is positively contributing there. I think across our consumer products, we've been able, I think we are seeing progress on the organic side. Obviously, monetization is something that we would have to earn on top of it. The enterprise side, I think we are at a stage where definitely, there are a lot of models. I think roughly the models are all kind of converging towards a set of base capabilities. But I think where the next wave is, working to build solutions on top of it. And I think there are pockets, be it coding, be it in customer service, et cetera, where we are seeing some of those use cases, seeing traction. But I still think there is hard work there to completely unlock those.
And on your second question, first, thank you for your comments. Look, the reason we've consistently used the phrase that we're focused on durably re-engineering our cost base is because these are deep work streams. They're not tactical fixes, and we continue to build on them. And so the main areas that we've talked about are around product and process prioritization, around organizational efficiency and structure. Both of those are reflected in the headcount and the fact that headcount is down year on year. And across all of those, as I said, across our entire leadership team, we remain focused on continuing to execute against them. So in terms of, the most recent examples, as we talked about last quarter, with the combination of the devices and services product area with the platforms and ecosystems product area. We announced that back in April. And what we discussed last quarter and what we're seeing is that unifying teams across these organizations helps with product execution. And what we're really focused on is really adding to velocity and efficiency. So kind of the gift that keeps giving. And then more broadly, all of the work streams that we've talked to you about before, we continue to remain focused on. A big one, very important one, is all of the efficiency efforts, the work streams around technical infrastructure and improving efficiency there. We're also working on the use of AI across Alphabet. We're working on continuing to build on what we've done with our centralized procurement organization. We're continuing to optimize our real estate portfolio. And so, again, this is across our leadership team. These are efforts that all build to this phrase, durably re-engineering our cost base.
Great. Thank you both.
And our next question comes from Doug Anmuth with JP Morgan. Your line is now open.
Thanks for taking the questions. One for Ruth and one for Sundar. Ruth, you've now had Google Services operating margins of roughly 40% for the past 2 quarters. Just as you create more capacity to help offset the future investments, is it reasonable to think that you could sustain at those kind of levels going forward? And then, Sundar, just as it relates to AI overviews, you talked about the positive trends there. Could you just help us understand where you are, how far along in rolling out AI overviews, and then any more color around kind of click-through rates and monetization levels relative to your traditional searches? Thanks.
So in terms of the Google Services operating margin, it did reflect all the work that we're doing on durably reengineering the cost base. It also reflected the benefit of strong revenue performance in search. And so what I tried to lay out in the comments as we look forward to the third quarter is operating margins will reflect the increases in depreciation and expenses associated with higher levels of our investment in technical infrastructure. It will also reflect higher expenses associated with the Pixel launch due to the pull forward. So those are important factors. I would say overall, company-wide, it's important to note that we do expect to continue to deliver full year 24 Alphabet operating margin expansion relative to 2023, but did want to highlight those important points as we look forward to Q3.
And Doug, thanks. On the AI overviews, we have rolled it out in the US, and we are, will be through the course of the year, definitely scaling it up, both to more countries and also, we have taken a conservative start, focused on quality, making sure the metrics are healthy, and so on. But you will see us expand the use cases around it, and we'll touch definitely more queries. All the feedbacks we have seen are positive, and on the monetization side, I think Philip has touched upon it. Maybe Philip, anything more you want to add there?
Yeah, yeah. Look, innovation and improvements to the user experience on search have historically opened up new opportunities for advertisers. We talked about this before. We saw this when we navigated from desktop to mobile, for example, and we can see Gen AI obviously expand the types of questions we can help people with, as Sundar mentioned. And as we said before, people are finding ads either above or below AI overviews helpful. We have a solid baseline here from which we can innovate. And as you have probably noticed at GML, we announced that soon we'll actually start testing search and shopping ads in AI overviews for users in the US, and they will have the opportunity to actually appear within the AI overview in a section clearly labeled as sponsored when they're relevant to both the query and the information in the AI overview, really giving us the ability to innovate here and take this to the next level.
Thank you. Best of luck, Ruth, in your new role.
Thank you.
Our next question comes from Michael Nathanson with Moffett. Please go ahead.
Thanks. I have two, one for Sundar, one for Philip. Sundar, on the decision this week to not deprecate cookies, I know it's been a long journey. Can you talk a bit about what we should expect in terms of the new experience in Chrome and why the company made the decision not to go down the path of deprecating cookies? And then, Philip, I know it's only 1 quarter, but it's interesting that search is growing faster than YouTube, which surprised some of us. But can you talk about what factors you think are behind the differences in growth rates between these markets? And is there anything on the AI front that you could see maybe re-accelerating YouTube growth as you've seen happen with search? Thanks so much.
And Michael, on cookies, look, I think obviously, we are super committed to improving privacy for users in Chrome. And that was the whole focus around Privacy Sandbox, and we remain committed on the journey. But on third-party cookies, given the implications across the ecosystems and considerations and feedback across so many stakeholders, we now believe user choice is the best path forward there. And we'll both improve privacy by giving users choice, and we'll continue our investments in privacy enhancing technologies. But it's obviously an area we will be taking feedback from the players in the ecosystem, and we are committed to being privacy first as well. Philip?
And on the second part of your question, maybe Ruth, you want to jump in first, and then I take the rest if needed.
Absolutely. So, look, as we both noted, search revenues really reflected broad-based growth across verticals. That was led by retail, followed by financial services. I think your question really goes to the heart of the year-on-year growth comparison. And as both Philip and I noted, we're really pleased with YouTube, the YouTube team, all that was done. Was driven by brand, followed by direct response. And they had very strong ongoing operating metrics, which Philip will comment on. I think the important point to note, I tried to tease out in opening comments, was that the deceleration in this year-on-year revenue growth for the second quarter versus the first quarter primarily reflected the tougher comparison versus the first quarter. Because at that point, as you probably recall, YouTube was lapping negative year-on-year growth in Q1 last year. And then also Q1 benefited from the extra day from leap year. And so what you're also seeing here is with YouTube, we were anniversarying the ramp in APAC-based retailers that began in the second quarter last year, and foreign exchange headwinds as well that we noted. And so there's some timing issues going on, and what we're trying to highlight is the underlying operating strength. Back to you, Philip.
Yeah, that was very comprehensive. Nothing really to add from my side here.
The only thing I would say, I think, to Brian's first question on areas where things are maybe taking longer, I think, look, we are all building multimodal models. At least Gemini has been natively multimodal from the ground up. But most of the use cases today that have been unlocked have been around the tech side. So in terms of getting real generative audio, video experiences working well, I think there is still, it's going to take some time. But over time, obviously, it'll be deeply relevant to YouTube. And so it's an area I'm excited about in the future.
Okay. Thanks all. And best to you. Thanks.
Your next question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thanks so much, and I'll echo the thanks for Ruth for all the insights and partnership over the years on these earnings calls. Sundar, maybe first for you, in terms of cloud and bringing AI to the enterprise, I wanted to know if you go a little bit deeper in terms of how you're seeing AI actually get adopted, implemented, what it potentially could mean for the strategic positioning of the cloud business and the potential for AI workloads to be a stimulant to revenue growth for cloud first. And then following up, the last set of questions on YouTube were really about the macro or the ad environment. What do you guys as a team continue to learn about the subscription side of YouTube and the appetite for consumers to engage with a broader array of media products at the subscription layer? Thanks.
Thanks, Eric. Look, on the cloud and AI stuff, obviously, it's something which I think will end up being a big driver over time. I mentioned in my opening remarks already. If you take a look at our AI infrastructure and generative AI solutions for cloud across everything we do, be it compute on the AI side, the products we have through Vertex AI, Gemini for Workspace, and Gemini for Google Cloud, etc. We definitely are seeing traction. People are deeply engaging with Gemini models across Vertex and AI Studio. We now have over 2 million developers playing around with these things. And you are definitely seeing early use cases. But I think we are in this phase where we have to deeply work, and make sure on these use cases, on these workflows, we are driving deeper progress and unlocking value, which I'm very bullish will happen. But these things take time. So, but if I were to take a longer term outlook, I definitely see a big opportunity here. And I think particularly for us, given the extent to which we are investing in AI, our research infrastructure leadership, all of that translates directly. And so, I'm pretty excited about the opportunity space ahead.
And then on your second question with respect to subscriptions, kind of implicit in your question, how strong is it? As I noted in opening comments, that overall line, subscriptions, platforms, and devices delivered healthy growth, and that was led by subscriptions. And as we've said on many calls here in a row, the subscription revenue growth continued to be quite strong. It was driven by subscriber growth in both YouTube TV and YouTube Music Premium. And then the other component within that line is Google One, that also delivered strong subscriber and revenue growth. But I think the heart of your question is really around YouTube, and that is the heart of the revenues in that line. So it continues to be very strong. We see a lot of take up in it, strong subscriber growth, really pleased with it. We did note that growth on that line decelerated due to anniversarying this YouTube TV price increase, but at the heart of it are people interested in the subscription offerings, and is the take up significant. We're really pleased with it.
Thank you.
All right, guys. So for that, we are going to switch on over to the Tesla earnings call. So the Tesla earnings call starts in about 10 minutes or so. So we're going to go ahead and switch over to that stream. Again, you won't have to go anywhere if it doesn't redirect you, which it should. But if it doesn't redirect you for whatever reason, you're going to be able to go to this stream here and watch the Tesla earnings call, which is, again, scheduled to start in about 10 minutes or so. So there's the Tesla earnings call if it doesn't redirect you, but it should. As soon as we close this stream down, it should immediately bring you to the Tesla Q2 earnings call. So I appreciate you guys watching me on this one, and yeah, we'll see you guys over on the Tesla call. I'll see you guys over there.